Hello everyone, this is the pre-market report video for today 24th February 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Before going into the video, I just want to inform you guys, I don't have any Telegram or Twitter or Instagram or Facebook account. To be frank, I don't have any social media account at all. And I will never ask anyone to WhatsApp me or reply me for stock or crypto tips at all. As I said lot of times, I know I'm not a celebrity, but still some people are creating this fake account, so please be aware of these fake peoples. It made me worried, so please be aware of this. Now coming to the topic, yesterday for the 5th consecutive day, our Indian market closed negative. However, during the day, it traded mostly positive. Nifty opened a gap up of 20 points and within 45 minutes, it dropped 100 points and regained those 100 points. Then finally, in the last half hour, it dropped marginally. I want to clarify this. 100 points drop and 100 points gain in Nifty is not volatile and it's normal. See, 100 points in Nifty at present comes as just 0.6%. So 0.6% move up and down should be considered as normal. If Nifty is trading 7,000 or 8,000, then the 100 points move is very volatile. But at present, Nifty is trading above 17,000. So 0.5% or 0.6% is the normal move. Anyway, for the second consecutive day, FII's net sold shares worth approximately 1,420 crore rupees and DAI net bought shares worth approximately 1,585 crore rupees. After our market hours, all mainland European market closed positive because of the very good inflation data. In US, inflation peaked 9% in the last June month, but that was not the case in Europe. There, it peaked over 10% only in November, which was released in December. So, December month inflation data released in January is the first indication of decline. That's the reason this following second month decline in Europe is very important. Anyway, for the January month, the Eurozone consumer comes as 8.6%, which is good. Then, before the US market opening, US Bureau of Economic Analysis released the US Q4 second estimate data. The data comes as 2.7% against expectation of 2.9%, which means US economy is not growing as expected, which is good since market wants the economy to slow down to cool inflation as well as to prevent aggressive interest rate decision. However, the following released labor data, US Department of Labor released the number of people who filed for unemployment insurance for the first time during the past week. Again, for the 6th consecutive week, the data comes as sub 2 lakhs people, which indicates strong labor market. So, it's kind of mixed. However, Nvidia came up with a very good revenue and profit guidance for this year. For those who don't know, Nvidia is one of the world's largest semiconductor company. Due to their good guidance, their stock price increased over 14% and thus positive on Intel and AMD stock price. Because of all this, at the end of the day, Dow Jones increased by 0.33%, S&P 500 up by 0.53% and Nasdaq 2 up by 0.72%. US VIX crashed 5% to 21 from 22.3 on Wednesday. Even though the overall outlook looks positive, however, last night there were some weakness. For example, Netflix down over 3% due to the reduction of subscription fees in certain countries and eBay closed over 5% down. Another general negative in the US market last night is the oil price. It increased over 2% due to low crude oil US inventories. At the time of this video, WTI crude oil was trading near $76 per barrel and Brent crude oil was trading near $82.5 per barrel. Dollar index was same as Wednesday, 104.5, whereas 10-year Treasury bond yield decreased to 3.89 from 3.92. Coming to Indian areas in US market, finally it turns positive. Both IT and bank areas closed positive approximately around 0.2 to 0.4%. In case of SGX Nifty, at present 3 am Indian Standard Time, it closed at 17,629. Since yesterday was the monthly expiry, SGX Nifty is trading at 65 to 70 points premium, so it's kind of indicating 30 points gap up opening. Now coming to India related info, yesterday in the aftermarket hours, Fitch, one of the 3 important global rating agency, affirms BBB negative with stable outlook for Adani Transmission's new $400 million senior note. In simple English, Senior notes means loan through corporate bond, which means new debt. For those who are not familiar with credit rating, triple B minus with stable outlook is the maximum very good rating that anyone can give to Adani stocks in the present scenario. So let's see whether this good rating at least stops the Adani transmission from hitting the lower circuit. Just for info, for the last 12 days, Adani transmission continuously hits the lower circuit every day. Even yesterday, 8 out of 10 Adani stocks closed significantly negative. Moving on, yesterday one of the Monetary Policy Committee member mentioned that he wants the real interest of about 1%. Which means in simple English, the difference between the interest rate and the inflation should be positive 1%. At present, RBI's interest rate is 6.5% and India's inflation on January month also comes as 6.52%, which means difference is roughly zero. Here, what he was indirectly telling is that he will vote for increasing the interest rate if the inflation on February month comes as over 5.5%. I don't think it will have an impact today on the Indian market, but I want to discuss this so we can understand the thinking of RBI members. As a summary, US market positive closing indicating 60 to 70 points gap up opening, whereas SGX Nifty and Indian ADS indicating 30 to 40 points gap up Nifty opening. So in all the pre-metrics so far indicating positive opening, but will it sustain? Only time has to say. Let's see. About the things to look out, today in the aftermarket hours, RBI is going to release the bi-weekly bank loan and deposit growth data. They will also release the India's forex reserves data, so I like to keep an eye on it. Since last week, it dropped over 10 billion US dollars and at present, RBI is aggressively defending Indian rupee against, so it's good to know the impact. Then in US, their Department of Commerce will be going to release the much important PCE inflation data. I told a lot of times in the pre-market video, as per Fed people, PCE inflation is much more important than the consumer inflation. So this PCE inflation data got the potential to make or break. Now coming to technical, in daily chart, Nifty forms a 6th consecutive bearish candle and also forms the 5th lower highs lower lows candle. The good here is it's short bearish candle with a medium upper and lower shadow. And also it taking the support at 17,500 which has the maximum put option open interest build up. If the index holds the level in the coming sessions, it can move towards 17,700 to 17,800. However, if it drops, then it can further slide down towards 17,350. Then regarding Bank Nifty, after 5 days, finally it break away from bearish candle formation and forms a bullish doji kind of pattern with a long lower shadow indicating indecisiveness. Which means from overwhelming negativeness, it turns to be neutral. It's kind of hinting at the possibility of bounce back after few sessions of selling pressure. Coming to moving average and technical indicator summary, for Nifty and Bank Nifty in daily chart, it is same as day before yesterday. Strong sell on everything. As you may know, yesterday was the options weekly and monthly expiry. So I don't prefer referring open interest. So instead of options open interest, let's have a look at the pivot chart for both Nifty and Bank Nifty. So from pivot chart for Nifty, at present, the immediate support is at 17,430 followed by 17,360. On the higher side, resistance to break is at 17,630. In terms of Bank Nifty, the immediate support is present at around 39,580, whereas resistance is at 40,460. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.